Okay, well, welcome everyone and people that are joining in. We will have this available post for limited time. Welcome, this is our second webinar with our database partners, IDC here in North America. So without further ado, I'm going to introduce Frank Vitagliano, CEO of the GTDC, to get us started.
Thanks, Kavita, and welcome everybody. We're really happy to have you join us on our third quarter GTDC IDC webinar. The speakers today will be, the webinar itself will be hosted by Loren Loverde, who is the IDC VP of Data and Analytics. And he'll be joined today by Bjoern Stengel, who's the IDC Research Manager for Global Sustainability. And one of the reasons we picked this topic is that, as many of you know, I'm sure, this is a really significant topic, certainly, for all industries, but for sure in the IT space. And one of the things that we've been focused on at GTDC, and if you go to the next slide, you'll see the cover of our recently released Sustainability in the Channel report that we released on May 5th. And it really highlights all of the initiatives that are in place and in fact underscores the focus that our distribution member companies have in this area. And I will tell you, there's significant investments and really a lot of focus in this area. So we're really happy to have Bjoern join us to talk a little bit about this from an IDC perspective, as well as an update from Loren in terms of, what's happening in the market in terms of, the data and data trends. One last point before we move on is that we'll have our next GTDC research report out in probably 2 weeks, mid-August, I expect it. And what we're going to do there is talk about the investment trends in the overall IT industry, and also highlight what's going on in distribution, because as many of you know, there's been a lot of activity in the past couple of years in total, and certainly in distribution also. So look for that. That's coming. That'll be available on our website within a couple of weeks. So with that, let me turn this call over to Loren and the IDC team. So Loren, take it away.
Thank you, Frank, and thanks everybody for joining us. I think that's a great intro, and we're very happy to have Bjoern here with us to talk about sustainability. It's definitely getting a lot of visibility, growing importance. What I'm going to present before we get to sustainability is IT trends, and try to put the GTDC data in perspective of the macro environment, look at where the opportunities are, what kind of growth we have. So we're going to start with the top line, go into some highlights, and then we'll get into the sustainability of that. So starting with the macro environment, I won't go into excessive detail because I think we've all been sort of inundated with news, and there's something new every day. But the big theme is that the risk of recession is rising. I think stock markets domestically and internationally are realigning around that possibility or probability, and that inflation and monetary policy are having a key role in that. Despite that, there's a lot of strong economic fundamentals. So then we have, a suite, even the inflation could be included here, but of factors that we faced over the last, year or two that are having an unusual and significant impact on the market. So the war in Ukraine has disrupted local markets. It's had a particular impact on food and energy, but also, national security, and it's having a global impact because of the geopolitics related to it. COVID continues to be an issue. We have seen new variants. I expect that we'll continue to see new variants, but I think we've kind of been to this dance before now. most folks are settling in to, I guess, get by with COVID. So there may be some disruptions. There's likely going to be, continued spikes in infections, but I think the world's going to move forward and the impact on spending will diminish as we go forward. China stands out with their impact, their strategy of shutting down certain locations to prevent the spread of COVID. I think likewise, we made it through that phase earlier this year, and our expectation is that going forward, that will loosen up and contribute to overall supply. So supply has remained constrained despite some areas of improvement, a bit like COVID and quite probably tied to COVID. We expect a few bumps, but generally improving situation. And then beyond that, IT budgets so far have been quite resilient. So on the enterprise side, companies continue to prioritize infrastructure and really see IT as a way to be agile and responsive to these market forces, and that's become a priority. So protecting those IT budgets has been an important priority. On the consumer side, they're much more susceptible to inflation and everyday costs. And we've already seen some spending come down, for example, in personal computing. We expect they'll continue to be under pressure, perhaps even more pressure going forward. So let's take a look at inflation. This is US Consumer Price Index, or core inflation, over the last year and a half. And you can see, the gasoline inflation is dominating the picture here. We had a significant drop during 2020 in the pandemic, and then through 2021 and 2022, we've had a substantial rebound. Overall, energy is following, highly influenced by gasoline, but quite high. And then if we look at these other categories, food, electricity, and all items except for food and energy, you can see a notable increase over the last year. And that's brought us to over 9% inflation in the latest reading. Having said that, here's the same chart with the 20-year history. And while we are breaking, I think now 40-year, or this is the highest inflation we've had in 40 years, we haven't quite passed the 30-year get to the next jump. But anyway, over the last 40 years, this is the highest we've had. It's not accurate to say that we haven't had some inflation and some variation by different categories. And to me, the gasoline inflation here, you can clearly see that there's been ups and downs over the years. They don't last forever. They don't go through the sky. So anyway, I think that's a useful perspective. Obviously, there's a lot of politics and news and a lot of, things that depend on this. But anyway, hopefully that's useful environment or perspective. So next, this is IDC's inflation outlook on a regional basis. And I think it's helpful to look at inflation across the world. Like the geopolitics, the IT supply chain is global. Many aspects of the economy are global, and inflation is really not just a US phenomenon, it's happening across the world. So that's one takeaway. The other really is that our expectation, this is consistent with consensus economics, is that inflation will subside as we go forward. So the exact timing and magnitude will depend on what happens next, but in terms of the outlook, I think this is a good reference. And then how does IT spending generally relate to GDP, and particularly when we've gone through recessions or times of economic weakness? So here's a 20-year trend with IT spending in red and GDP, this growth basis and GDP in green. You can see that IT is clearly leading throughout almost the entire trend. The exceptions are the dot-com bust in the early 2000s and the housing and financial crisis in 2009. But for example, 2016 saw a dip. 2020, we saw a dip in overall GDP from the pandemic, and IT spending didn't fall as dramatically. So anyway, good prospects for future IT spending. The dashed lines here represent a scenario where the US goes into an economic recession officially and inflation persists. So that does bring the trend down a bit, but but within historical trends, and there's still quite a bit of a growth in IT spending. Okay, so let's shift into the actual distribution results. These are focused on revenue growth of the North America distribution tracker participants. And I guess, first of all, we've got good volume. You can see the orange line is year-on-year growth. The red line is the zero. So we've had, consistent growth over positive growth for the last year and a half or so as we've recovered. When we look at this and try and interpret the growth rate, the baseline really matters. So that peak growth of 26% was versus a pandemic low in 2020. If you look at the next peak in January of 2022 and compare it to January of 2021, you're basically growing a large amount from a very low base. And then similarly, if you look at May in particular of this year, you've got the lowest growth over the last year and a half, and that's precisely compared with the peak from the prior year. So the baseline for year-on-year growth matters. We've got easier year-on-year comparisons for the peak growth periods and weaker periods. Q2 were both positive on top of positive year-ago growth, good sign of demand. And from a volume, although June growth was relatively low, June volume was actually third behind only December of last year and March of this year. So I think pretty solid results. I'm going to try and support that with some additional information in the next couple of slides. They've added a weekly view here, in part to highlight that we have the weekly data and to recognize that this can be a useful view for new trends. You get the latest pulse on what's happening with distribution. As it is expected, you would see a bit more volatility. There's clearly some seasonality, but an advantage of this is that every week is 7 days, which is, every month is not 30 days. So this is a little bit more consistent. It's higher frequency, but we have to put it in perspective of managing the ebbs and flows of just weekly volatility. So one way to do that is to do a rolling view. In this case, 4 weeks. You can also do 13 weeks. And this is more consistent than monthly. It's got the same number of days in every period, and it's got a higher frequency, updated weekly. And you can see quite a lot of positive growth. So, I think that is a really good indication of overall demand and distribution success in serving it. To do even better than that, or rather to account for this cycle that we're in at the moment, where we had, depressed values in 2020 and then rebound in 2021 in many markets, it's useful, or can be useful, to compare trends of the sum of the current year and the prior year. And this is a method to kind of account for that, whether the prior year was an easy or difficult comparison. And when we do this, you've got a much more consistent trend, and you've got a fairly consistent growth pattern with very few negative data points. So one final step to add to this, I'm adding trend lines. If we add a polynomial trend to these, you can see that the straight rolling 4-week average peaked in May 2021 and in February 2022. Those are the blue lines highlighted there. We've had a couple of lows, most recently in mid-June date of 2022, but starting to tick up. If we look at the same trend with the current plus prior year, I think this, this attempts to account for those year-on-year comparisons. We've got a much smoother trend. We do have a low from July of last year, which I think corresponds with sort of logistics challenges and coming off with a peak of recovery, which was a little bit earlier in the year. But if you look particularly at the last 6 months, that trend is strengthening and stabilizing. So, there's some gymnastics here. You certainly need to, keep the approach in perspective. But all of this to say that I think we've got, recent evidence through June that IT spending and distribution is still performing very well. Okay, so let's take a look at overall spending by category. Personal computing remained the dominant category, followed by software and services, and so on. When we look at growth, consumer electronics was way out in front, and this was heavily impacted by growth in mobile phones, which typically don't go through distribution that much, but they're a very large market, and we saw a significant surge, so that boosted their share quite a bit. They've more than doubled from the prior year. Let me also note, unfortunately, the order of bars on the right is inverse of the legend on the left. So you really want to read this from the bottom up. So personal computing declined a small amount, just 3%. The next 3 biggest categories were all positive. And then we did get into some slight negatives, which is, numerically a little lower than last quarter. This quarter, the average is 5% up. Last quarter, it was 13% up, and with no declines in any of the categories. So we do have, softening in some of these segments, but overall, quite solid results. Comparing the US and Canada, you may recall that last year, Canada had a much more difficult time than the US. Last time we had the US at +16 and Canada at -5, so more than a 20% delta overall. This time the US was up 6% versus +2 for Canada, so just a 4% split. And you've got, lots of, there's a couple of categories, AV and peripherals and accessories, where Canada's ahead, also software. But the alignment between the markets is a lot closer than it was last quarter. And then sort of back to the year-on-year comparison trends, I think this is quite interesting. So the blue line is Canada. They had a much more pronounced and longer lasting peak recovery from sort of a fourth quarter of 2020 through the first half of 2021. And, that set the market up for a very difficult comparison in the first half of 2022. That last June line in blue shows a significant uptick as we pass that difficult year-on-year comparison. So Canada should have an easier time going forward. We'll see higher growth. And we have almost the inverse in the US. So the peak recovery was much more concentrated in around June last year. And that's part of why we're seeing growth slow in May and June. So anyway, hopefully useful trends there. Okay, so PC products were the largest component of distribution revenue. They recovered after a decline in April and May. So the blue line kind of stands out. That's workstations with about 9% share. You want to start with the red line, which is total spending. We had negative growth in April and May, as I mentioned. We did have positive growth of about 5% in the first quarter. That was down from 12% in 2021 and 2020 and 2021. So we no doubt that we're slowing, but continued positive growth, really reflects well on distribution volumes and the persistence of demand there. So notebooks is the largest category. They had about 2/3 of the volume. They were up pretty substantially during the pandemic cycle, so 30% in 2020 and 17% in 2021. To grow 11% on top of that in the first half is really pretty solid. If you look carefully, you'll see that desktops kind of slip as notebooks ramp up. So desktops are in the gray line. They saw their strongest growth this year from February through April, when as notebooks were kind of declining, and then now in June, as notebooks tick up, the desktops have continued to sort of slow down. Tablets tablets are in the yellow. They've been one of the slower categories, and despite a rebound in January and February, tablets were up a little bit, 7% in 2020, but down 6% in 2021. So not benefiting as much as the overall as desktops and notebooks. From a vendor perspective, Apple is really stealing the show here. So they are in the orange line at the top of this chart. Apple was up nearly 100% in notebooks early in the year. On an overall basis, that was closer to just short of 70%. And they did slow, even including a little negative growth in May, but they've rebounded to more than 50% growth in June. So super, super strong results from Apple, benefiting from their recent product refreshes. Lenovo actually has the largest share of the distribution. Microsoft and others joined Lenovo with declining volume in both June and Q2. So, it's a sign of how differentiated Apple is at the moment. HP was the second largest player. They're up 2% in June, but down in the first half and in Q2 overall. Dell's the fourth after Microsoft, was up just 3% in June and the same in the first half of 2022. So, from a market level, very nice rebound, and from a vendor perspective, clearly Apple carrying the show. Let's take a look at software here for a minute. No build, that's fine. So software overall improved again. You can see that there was a dip. I put semi-annual data here to provide a bit more of a historical perspective and some stability. Obviously, the data is available by week and month, but there are so many vendors and so many categories that there's a lot more volatility. And so in this particular case, just to simplify the story, looking at half-year trends. So anyway, overall, second half of last year and first half of this year are up. You can see that the yellow line, system infrastructure software, ticked up. That was the biggest category. Other software, which is another 20% of the market, actually was the fastest growing category. where applications in orange and application development and deployment in blue were the slower growing segments of the market. So what we're seeing in this is that as the market tightens, rising labor costs and so on, inflation affect the outlook for spending. A lot of companies are choosing to buy before many of those price increases get locked in. And they're also benefiting, the distribution channel is benefiting from basically providing resources where other resources are tight. So labor, skilled technology folks, sales and marketing, and obviously leveraging the efficiencies of the channel is a really good opportunity. For the system infrastructure software and other software, these categories are close to or embedded in infrastructure to leverage existing investments. So, you know, IT resiliency, agility, moving into the cloud, these things are benefiting system infrastructure software and other software. So I've listed here some of the key companies: Palo Alto Networks with security, Cisco with networking, Nutanix with hyperconverged infrastructure. Those types of solutions are growing strongly. We've also got data protection from a couple of the other players in the market. And then on the apps and app development, those are, you know, they favor direct channels where vendors and customers can engage and talk about the priorities and customize their result. We've got some high growth categories like the AI, automation and robotics, and those are harder markets for distribution to support. So, you know, we think that is having a direct influence on the slower growth of those categories. It's worth noting that as those segments of the market become more mainstream, they may be more accessible to distribution. So something to keep an eye on going forward. And then finally, cloud software and infrastructure investment is growing generally. That's, I'm sure you've heard lots about it, very positive. The other side of the market is on-premise software, which is growing a bit slower. And so anyway, distribution traditionally is stronger in the on-prem part of the market rather than the cloud piece. So then finally, let me go back to the bottom chart here on the left. This is the top 5 within system infrastructure revenue, the top 5 companies. And mainly what I want to point out is these trends are up and to the right, which is growth and what you want to see. There is a bit of a dip in Red Hat, but could very easily be just seasonality or short-term trends. So very, very solid trends overall. Okay, finally, I want to talk about services, and then we'll go into the sustainability. So services spending also is accelerating in June, led by warranties. You can see the line in gray. Overall services revenue was up 11% in this year, and that's up from relatively modest growth of 4% last year in the first half and 6% in the second. Warranties led the market. You can see that actually in January, they were up more than 100%. That was followed by more than 36% growth in February and June, putting overall year-on-year growth at almost 40%, very respectable. Support services were up just 2% in comparison, but that was an improvement from the prior year. And services were up 13%, which was similar to the growth of last year. From a vendor perspective, the top 3 have returned to positive growth. So you can see Cisco, VMware, and HPE, each ticking up in particularly Q1, but also Q2 as positive growth. NetApp actually was set the pace for the market, had the fastest growth over the last couple of years. You can see the peak in the third quarter of last year, but they are still up 21% in this year. So very respectable, and rounding out the top 5, Palo Alto Networks was up 26% in 2022. So on top of 7%, so pretty substantial jump from the prior. So anyway, in conclusion, I think really strong results through distribution. IT spending is holding up remarkably well. It's fantastic to have this high frequency weekly data to give us insights into so many segments of the market, and fingers crossed that we'll be able to manage inflation and COVID and the war and so on as we go forward and keep those distribution levels high. So with that, I'll pass the floor to Bjoern, and we'll talk a bit about sustainability.
Thanks, Loren, and thanks, Frank and team, for having me on this webcast. Yeah, shifting gears here a little bit, I want to give you a bit of an overview of the sustainability research that we're doing at IDC and some of the data that GTDC has been leveraging in some of their recent reports. My name is Bjoern Stengel. I'm based in Boston. I lead IDC's global sustainability and technology research. I'm part of a global team of analysts that looks at sustainability in the technology and services context, really end to end. So we cover the sustainability related impact of technologies and professional services, looking at sustainability consulting, IT consulting providers with a sustainability offering, at software solutions in the context of sustainability and ESG reporting and disclosure. And then also more frequently, I would say, looking at the direct impact that technology can have through their own sustainability in the context of IT infrastructure and equipment. So from a methodological point of view, when we say sustainability, we really mean environmental, social, and governance topics. I know the environmental part has probably received the most focus and emphasis, especially in Europe, where I think the conversation has started quite a while ago, while in the US, companies are still in the process of catching up, but very rapidly so. And I think especially driven by increased investor demand, I would say the conversation has shifted from just looking at the environmental impact that companies' operations have, especially in the context of greenhouse gas emissions, to a broader set of topics that we're looking at now. So on the social side, obviously here, especially in the US, topics like diversity and inclusion are quite important, but then also on the social capital side, so social impact outside the sort of the direct operations of a company in the broader supply chain and sourcing context, human rights management, for example, community impacts is of increasing importance. And I would also say one thing that I want to point out in the context of our research, but something that you also might find important, especially given the economic climate that Loren has been pointing out, is I think a lot of companies, have made quite a bit of effort looking at sustainability within their own operations, which is an area that we cover and that I can speak to. But increasingly, I think when we're talking to clients, we're talking about the sustainability related impact that their products and services can have, really that enabling capability that they have for the sustainable transformation processes of their clients. And I think that's a very interesting angle, because it's linked to what organizations are doing internally, what your internal sustainability efforts look like. But then linking that to the value proposition of your products, I think is a really interesting angle and something to focus on. If we shift to the next slide, I can talk a bit about the differences that we've been seeing in terms of approaches to sustainability and the way in which organizations look at corporate sustainability. So I think if you've been following trends around corporate sustainability over the past decade or so, there's been quite a bit of a shift moving from what we used to call CSR, corporate social responsibility, where sustainability was kind of like its own silo and looked at something that's a bit more of a cost factor, maybe impacting reputation or brand, or looking at sustainability more as a compliance issue, to ESG, which is more of an investor-driven approach, factoring sustainability topics and sustainability-related value drivers directly into the way in which we look at corporate performance and basically looking at sustainability as corporate value drivers. And we see that in our survey work, that shift in focus. So in 2020, we conducted a survey amongst decision makers around the world, where we ask, how important do you consider ESG to be for the enterprise value of your organization? As you can see, about half of the respondents considered ESG or sustainability to be very important. Now in 2021, just 1 year later, almost 3/4 of respondents said that ESG is a very important issue for the enterprise value of the organization. So that, I think, really shows a shift in thinking, and a shift in the way in which organizations look at sustainability. And this is driven by different stakeholder groups, investors, as I mentioned, regulators and lawmakers, especially in Europe. I think we hear a lot about that impact, but also customers and consumers, partners, advocacy groups, communities. There's really a broadening spectrum of stakeholder groups that impact organizations thinking about sustainability in the way they are being held accountable. And we think that technology or IT plays a really important role in terms of facilitating sustainable transformation, as I said, through the sustainability of the technology itself, the energy and water consumption, but also the way in which companies handle issues like waste management, packaging, end-of-life management, etc. But then also, I guess, the sustainability-related functionality of some of these offerings. If you think about software, for example, the way in which software can help track ESG information, curate ESG information, and then help organizations disclose that information, or the way in which professional services firms can help companies improve their ESG performance. So if we move to the next slide, please. As we can see, there's still varying maturity levels and degrees of integrating sustainability and ESG into the business life cycle or the business operations. But as we can see, organizations are making increasing progress on these efforts. Of course, it would be worth looking at this a level deeper in terms of the specific topics that they are addressing, and the way in which they capture and report data. Is it in a qualitative way? Is it in a quantitative way? Are they leveraging data to make better business decisions? And we have some of that data available. So if you're interested in a deeper conversation, you can definitely reach out to us, and we can take a deeper look at some of that data. So this is really meant to be a bit more high level here. But as you can see, the topic is growing in importance. I think the way in which organizations are looking at sustainability in a more deliberate way is increasing. And if we move to the next slide, you see that there's an increased focus on sustainability in internal operations, which is, I think, an area where definitely technology plays a big role. If you think a bit about it a bit from a life cycle perspective, we've seen a lot of focus over the past years on the strategy side, target setting, setting goals. So that's shifting more towards the operations part, where it's really about the use of technology to facilitate or to accomplish progress on the goals that oftentimes pretty ambitious goals that have been set over the past few years. And then, at least ambitionally, most organizations are already shifting towards a more integrated, purpose-driven, sustainable business strategy, which is really meant to cover not only the own operations, but also factor in the operations and the operational performance of your partners, of your suppliers, which I think is really important in the context of distribution, to think about this more as an ecosystem exercise rather than just looking at your own operations. So if we move to the next slide, please. So I just, as I said, we don't have a lot of time, so I just want to cover this a bit more from a high level perspective. But when we ask organizations about their top 3 challenges, you can see that there's definitely the data challenge. Data needed to make informed decisions is spread throughout the organization. I would almost expand that to a spread throughout various organizations. So, talking about accountability, it's not enough to just look at your own sustainability data, but I think especially in your context, you have a responsibility to also understand what your partners are doing, what the manufacturers are doing. Responsibility for the manufacturers doesn't end at the point where they ship off their products. There's an extended responsibility now, basically until the end of the life of the product, and throughout the life cycle, throughout the value chain, to understand the sustainability related impact of IT products. Lack of process for verifying the accuracy of sustainability data, I think, is a similar issue, but then also lack of expertise. And this is, I think, another area where distributors can play an important role, given the shortage of talent that we see these days, to be knowledgeable about the impact that the technology has that you work with, but also your own role in this whole context, and sort of the educational capabilities that you can provide. That's, I think, something that's really highly valued in the market, and is something that we really see also as an important criterion for making IT buying decisions, to work with an organization that really understands what sustainability is about these days and how IT can help facilitate the process. So looking at the top factors that drive sustainability these days, I think what you can easily see, it's not so much about hedging against the risks or the downside. It's really leveraging the upside. So improving operational efficiency, improving brand perception, improve supplier relations. So it's really about, making sustainability or ESG part of your day-to-day business, and seeking competitive advantages by being more sustainable. So really, looking at the triple bottom line of bringing financial profits and then also environmental and social impact together, and not looking at sustainability as something that stands on its own, or is just something that's a cost factor to the organization. But that's really the way in which most organizations, at least sort of from an ambitional perspective, are looking at sustainability and integrating ESG really into their operations. And then when it gets more to the product related concerns that keep IT buyers from buying from a certain vendor, there are definitely concerns around the lack of functionality, whether it's task specific or industry specific, or the maturity of the solution. So again, I think it's just really important to understand what IT is able to do in the context of facilitating sustainable transformation, but then also being able to convey that to the market, given the varying maturity levels that we're seeing. We also see a diverse set of buying centers and personas that are responsible for making IT buying decisions in the context of sustainability. So I think the educational element, educating the market, conveying the sustainability related impact, quantifying the sustainability related impact that IT can have and that your organization can have in that context vis-a-vis your partners, but also the end users, I think is just incredibly important these days, and is also something that I don't think is going away anytime soon, since sort of like the growth or the rise in maturity, I think is still a pretty slow process, and a lot of organizations are just getting started on their journey. Yeah, and then in terms of investment needs or increased investment needs over the next few years, as I mentioned, definitely the data part is a really big topic. Any kind of technology that can help with that, but then also energy management, which is really also about the sustainability of the technology itself. I think one takeaway is also that there's a broad variety of topics. I think, you know, a lot of conversations tend to focus just on the energy part or on the greenhouse gas emissions part. But I think the way in which stakeholders, and I mentioned this earlier, are looking at sustainability is more integrated across different pillars, and I think demonstrating progress and demonstrating the impact that technology can have on resolving some of these issues or contributing to mitigating some of the issues or the impact that your clients have in these areas, I think is something that's important to keep in mind, and is something that we're discussing with a lot of our vendor clients, to not just focus on one specific area, but really look at what's most material to the majority of your clients and your partners, and then being able to kind of like paint a more holistic picture in terms of the impact that you can have on a variety of ESG issues.
Hey, Bjoern, that's great. Just one quick question that I have. Obviously, there's been a ton of regulatory focus on sustainability in Europe. Do you see that happening across the globe? In other words, more regulatory pressures in North America and other areas, or is that still slow to happen?
I think we're seeing more of that. I mean, if you're looking at what the SEC has been proposing, and, you know, I think for a while there has been some quasi-regulatory pressure in the US, sort of like through the indirect influence that investors have and the own, you know, standards that they've been setting for themselves. I definitely see that happening, and I think there's more to come, although right now it's, you know, it's a bit more fragmented than in Europe. But also, I think equally important, I see other stakeholder groups taking over more influence in other parts of the world. In Europe, I think investors are becoming more influential, and some of the US-based standard setters, SASB, I think, you know, is making efforts to have more global reach in terms of their very investor-focused set of standards. So I would say that it's, you know, the mix of stakeholders that are becoming more relevant around the world, and then depending on the region, you know, the ones that have been less relevant, I think, are gaining in importance, rather than, you know, sort of like that fragmented situation that we had, where in Europe it was more about the regulatory environment, and in the US more, you know, investor driven.
Yeah, thank you.
All right. Well, thanks everyone again for joining. Thank you to the IDC team for making time and putting together these great slides. Really appreciate it. Very informative.